Welcome to Markets Now. I'm Michelle Rook with Randy Martinson Ag, and we closed out the week with mostly lower prices in grain and livestock futures trade. And Randy, let's start off with corn and soybeans. Boy, we had a pretty strong week. We got up into some resistance areas, though, it looked like on Friday. Is that why we saw maybe some profit taking?
I think that's part of it. I think we're looking at some, farmer selling that came into play as well that kind of pulled the market off the top. And then I think that started to get some of the week longs a little bit nervous, some fun profit taking. We do have some reports coming out here next week that's going to, I think, also put some influence on the market. But poor export sales for last week, the week of Christmas, I think all that kind of just came in to have guys want to just even up positions ahead of the weekend.
No doubt. So let's talk a little bit about what got us up to that point, though. We had some Argentina dryness, and that really caused some of the funds to have to cover shorts in both soybeans as well as in the meal market, right?
It did. We're talking about some hot and dry conditions. They're talking temperatures between 95 and 105 for parts of Argentina and very little rain. And that certainly is going to impact the growing crop that's out there. And they're not done planting yet either. So they're still seeing some planting progress taking place. But it certainly is going to help the meal market. I mean, Argentina is the largest exporter of soybean meal in the world. They do, control about 50% of the exports. So if we start to see a little bit of trouble in Argentina, that's likely going to bring some demand to the U.S. And that is the one saving grace we might have to help push our soybean market a little bit higher here as we go through this spring.
But with the steep losses that we saw in both soybeans and meal on Friday, do you think that maybe the funds are done covering shorts for this period of time at least?
I wouldn't think so. I mean, I think right now they've got the market down low enough. Now they're going to see what the news is. If the weather forecasts are, I think, verified on Monday when we come back, then we could start to see, I think, a little bit more buying come into the marketplace. So I think we could start to see a little more short covering at that point.
The corn market had also benefited from some of the Argentina dryness, but let's talk about that market because this has really been a demand-led rally. Doesn't look like demand has changed a lot. So do you think that corn will go back up and try to retest its highs?
I still think it will. I mean, I'm still thinking that 465 is the level that we're trying to get to. We've failed it a couple of times here now. But yeah, right now it does look like, in the report that's going to come out, USDA's final crop production report, most are expecting we're going to see another increase in exports. We possibly will see an increase in ethanol production. And that's going to trim our stocks, which all of a sudden things are going to look a little bit friendlier for corn again. And I think that could help take us to that next level.
Is corn the only place where you expect to see demand adjustments? Will wheat and soybeans maybe not see those?
I'm not expecting to see the exports increase for either wheat or for soybeans, but I wouldn't be surprised to see crush increased for soybeans as we continue to see record crush levels. And we saw that in the report on Monday or Tuesday when the census crush numbers came out. So I would expect that the crush numbers should increase for soybeans.
Okay, we get quarterly stocks out as well. What do you expect in terms of what we will have in storage, especially compared to last year?
Well, I think we'll see a little bit bigger stocks, especially in the soybean side. We kind of saw that at with the previous report, the quarterly grain stocks report. So I do expect that we'll see some pretty hefty numbers for soybeans versus last year. Corn is going to be an interesting one to see whether how the corn demand has been going. We had a little bit bigger crop, but we've also chewed through a few more bushels. So that one's going to be interesting.
Right. So for the week, it looks like soybeans are actually going to be up a little bit and corn maybe down a little bit.
That's kind of how it's looking right now. It looks like we're going to see, the small losses for the corn market, but when everything's settled out, and we're going to see 2 to 4 cent gains as far as soybeans are concerned. So that's actually a pretty good victory for soybeans, which right now, with the size of the potential crop in Brazil, that for the market to finish higher for 2 weeks in a row, that's pretty good.
Yeah, is the most bearish news already priced in?
I think it has been. I mean, we're already looking at a pretty large crop coming out of Brazil. Some are up in that 171 area, which is quite a bit higher than last year. So I do think the most bearish part is in. And if the rains continue in parts of the center south of Brazil, that might start to turn to be a little bit friendly because that means that harvest could have a little bit of struggle for some of those producers.
So wheat struggled Friday. It struggled for the week with the higher dollar, but on Friday the dollar reversed lower. Yet wheat, what, got drugged down by corn and beans, or what was going on?
Well, I think part of it was the corn and beans that drug it down, but I think part of it was also the poor export sales number that came out. I mean, it was even worse than anticipated. I think marketing year low for the wheat market, even though it was for the week of Christmas. And then they're also talking about some moisture moving in ahead of the cold snap for the southern plains, which will help insulate the crop. So we're kind of not seeing much of in the way of bullish news for the winter wheat crop. We're also looking at the drought monitor map is putting only 25% of the nation's winter wheat crop in some stage of drought, down from 27 last week and down from 32 from the previous week or from last year.
And so far, the market really has been somewhat immune to some of the bullish news out of Russia and the Black Sea, hasn't it?
It has. I mean, virtually we've been kind of ignoring the wars and anything taking place there. And even though they were seeing some escalation over the last week, it doesn't seem like the market is really paying much attention to it.
And let's talk about the cattle market, because we ended mostly lower except for the nearby February live cattle futures, but it was in the face of some record cash. I heard 201 being passed up in the north, in fact. Is this a reversal, and are you worried about the technical damage it leaves?
Well, it is a reversal. We need to have confirmation on Monday, so that's going to be an important day in as far as the cattle markets are concerned. You know, I think we did see some hedge selling take place that kind of put some pressure on the market. Everybody's nervous. Everybody wants to sell the cattle market, but they're not willing to step in front of the train. But this gave a lot of hedgers and a lot of traders the opportunity to come in on a market that's seeing a little bit of pressure. So I do think that Monday is going to be very important to the cattle. If we do see it come back up again, I think this market is still alive. But for the most part, we still have tight supplies. We still not hearing anything about the opening of the Mexico-U.S. border. So we still have a problem out there that this market has to deal with.
Yeah, I think March feeders scored an all-time high there, and so you would expect that maybe these funds would liquidate some here.
Well, it makes perfect sense to be taking profits at record highs and, for producers to definitely be putting floors underneath this market. I mean, we're waiting for something. I don't know quite what, but we're not as high as where we were last year in some of the, like in the LRPs and some of those coverages that we use, some of the hedge tools we use. But, we're right up there against it and seeing some really good profitability.
Hog market also had a poor close, below the 100-day moving average here now. So how much more fund liquidation do you think we'll see as a result of it?
Hogs, I think, are in a little bit of trouble. I think they're, we seeing, with the hogs and pigs report, and we're seeing a little bit slower on the demand side. I think hogs could see a little bit more pressure come into play. And if we start to see the cattle markets retreat, that's just going to add that much more pressure into the hogs.
Yeah, absolutely. All right. Thanks so much, Randy Martinson with Martinson Ag. That is Markets Now.